right, good afternoon, folks. This is your free video from seasonalswingtrader.com. Happy Tuesday to everyone. It is August 15th, 2017. Today we're going to take a look at ticker symbol MGM or MGM Resorts International. You can see here that our proprietary scanner has picked up a buy signal here. On MGM, we closed at $31.59, had a high of $31.66. So closing right near the highs here today. Have several other conditions that this trade is meeting for a good, solid, long candidate. From a technical perspective, aside from our scanner here getting a buy signal, you can see that we bounced nicely off of the 618 support areas. We did it back here in early July. We also held here in mid-May. So this trade looks somewhat favorable right now. We're also closing higher above the 100-day moving average with conviction. We've got the shorter term 9 moving back up into the 20-day average, and then we've also have broken a downtrend line here. So we bumped our head up into it yesterday, which was also some congestive area, which is the 100-day average. But since then, we posted a nice bullish candle today. So all the stars appear to be lining here. We've got a buy signal through our scan. We're bouncing off the 618. We're holding above the 100-day moving average, and we've broken a trend line. Now, we are seasonalswingtrader.com, so I must add that we also have favorable seasonal statistics. So over the next 6 weeks, MGM Resorts has on average historically risen 7.1% based on 27 years of stock performance. Our returns decrease a bit if we go down to the 4-week holding period. However, they still are favorable, rising historically 3.2% based on 27 years. So we're going to look at a 6-week time period hold to take advantage of a possible seasonal move. One trade we can look at if we go over to the chain for the short-term traders here, we could buy the stock here at $31.60, sell the 31.5 weekly calls against it at 65 cents. Now we would take a loss if we were to get called away. We purchased at $39.60, sold the 31.5, so we take a 10-cent loss on the stock, but we keep the 65 cents roughly a premium for a net trade of $55 or 55 cents per 100 shares traded. Otherwise, you can pick your poison and go out even further and ladder out on the call side accordingly, selling dollar strikes for every 100 shares owned. For call option traders, I would focus maybe on the September weeklies here with about 45 days left till expiration, and or the Octobers with 66 days left till expiration, buying anything slightly in the money preferably or at the money if and when possible. So you got the Oct 31 calls trading here at $1.88. Your break even on the trade is going to be $33.50. And so we'll be looking for moves up into the 33.5 area to break even. Seasonally, we're looking for about 7%, which takes us to $33.80 or so. So this is a good area to target here. These two highs up here in the $34 area. Put option sellers can sell spreads. If we look at the September strikes, we've got can consider selling anything at the money or out of the money if and where possible, spread out as needed. Looking here at the set 31.29s for 50 cents. If we go out to October, going to allow us to get a little bit further out of the money. We can go to the 30.28s, bringing in about 45 cents. The 30.27s bringing in around 60 cents. So depending on your overall risk tolerance, you can spread out as needed. If we're selling options, we'll risk 2 to 3 times premium. If we're buying, we'll risk approximately 50 to 60% of the option premium paid. Otherwise, I think we're wrong if we start to roll over and break down below these lows here at 30.40. So that's your trade idea of the week in equities. If you have any questions, please feel free to reach out or take a trial. And we look forward to seeing you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.